So we're talking about real estate investing. Now, in the UK, we call it property investing. In the US, we call it real estate investing. I actually never know, guys, where you actually stick the word property. Do you just keep it as real estate investing, or do you say property investing somewhere?
Oh, I don't know. And honestly, I don't think it really matters. We do talk about as properties as well. So probably U.S. property investing. I don't know.
In Canada, we can never quite decide if we want to be more like England or more like America, so we use them interchangeably.
Yeah.
Ah, fair enough. Fair enough. Okay, well, let's stick with real estate property investing, and then I can't get myself in trouble. So, just to introduce myself, I am a UK property investor. I'm also a qualified UK and US tax expert focusing on real estate property. So, that real estate, you can tell, is my game, and that's what I want to be known for on my gravestone. I don't care about being a good wife or a good dad, just want to be a good property tax guru. So, so hence the reason why I really like to help clients build wealth whilst being tax efficient. I think that's the key to what we're trying to deliver here. So with that said, let's get into the kind of slides. So Glenn, if I make you the host of this event, then I think you should be able to, yeah, if I make you a host, change host, you should now be able to go through the slides now.
I don't think so. But I can just tell you that's good enough. But anyway,
Okay.
so anyway, this maybe we'll skip this one. We'll go right to the next one. So for people who are wondering who I am a podcast host, a YouTube channel host. So what I've primarily been doing for the last few years is teaching Canadians how to invest in the United States. And I think what worked so well for Simon is that both Canada and Great Britain are Commonwealth countries. So it does have a lot of the similarities to the way we do this. And any of the finer points, Simon is he's an expert on. So he'll touch on that in a bit. But I do a lot of investing in the United States myself. My main podcast is called Canadian Investing in the U.S., where I interview guests every single week, and they're all typically Canadians investing in the U.S. Sometimes I've actually done some podcasts about investing in different parts of the world, but primarily investing in the United States and all the different, people have issues, how they solve issues. So it's a lot of storytelling on that one. Advanced Real Estate Talk is more of talking about the details of a certain topic and going deep into a certain topic. And all three of us are different types of investors. Ari, who's the top one, is typically into mobile home parks and small multifamily. Darcy's into large multifamily, and I'm kind of I'm into the larger multifamily myself now, but preliminary, I was into the residential real estate, which is 1 to 4 units. So it's a different perspective on everything. Yeah, if you can go to the next slide, please. So for people wanting to know more about me, I won't go 100-foot level, but I am a husband. I have a couple kids and wife. I did this all while having a job. I didn't leave my job until 3 years ago, and I was able to renovate 20 to 40 houses each year with having a job. Right. So a lot of what I do is I build teams, I build systems, and a lot of it is the way you run your system. Like a lot of it, you don't have to do this work. You just have to be able to set up teams and manage teams correctly, like setting up follow-up appointments. It's all about building a system that can just be, push the button, keep the follow-up items going, ask the right questions at the start, get contracts set up correctly at the start so that you can do this from a distance. You don't need to be on site in the United States. I typically, if you would have talked to me about a year ago or a year and a half ago, I hadn't seen hardly any of my properties, and I had hundreds of them. Things have changed a little bit over the last year. I started doing some property tours where I take some people down from Canada to just go take a look at them. So I have seen maybe half of them now, but a lot of times you don't need to. That's what I'm trying to say, that you can do this from Great Britain. You can set up these teams from anywhere in the world and be successful at this, because I'm a living example of this. Anyway, Simon, you can skip us along here. So anyway, for people who are wondering, like, what is the advantages of investing in the United States? This is just an example of one we did last year. So it just gives you an idea of what we're doing. So if you look up at the top corner, you see the purchase price is $17,000 cash, right? So these properties, you can buy these cheap. In Canada, that is not a thing. A building like this would be $500,000 in Canada. And I'm sure it's very similar in Great Britain. This is not something that you can pull off for 17 grand in most parts of the world, right? We did a $60,000 reno. So we did a full project, all worked in cash for 77,000 USD. We went and did an appraisal on it, refinanced the property, took all the equity out of the property plus some, and then rented it out for $850 per each side. And it cash flows about $833 a month. So I just want to give you a couple examples. I don't want to spend a lot of time. If you have questions, just save them to the end, and I'll be happy to answer any of these. And as you can see, even in the picture in the middle, that is one of my partners, and this is when we went to go see the property just to check it out. So yeah. Anyway, that is just like I was saying before. You don't need to go, but sometimes I do, just because it's a lot of people are interested in seeing them. You can proceed.
Sorry, I was just asking a question and I'm muted myself. On that point, I mean, you're right. Getting a property for 17,000 is an absolute no. You can't buy a bin in London for $17,000, I have to say. So when it comes to this kind of level, is it fair to say that most people will initially go in totally cash in the deal and then wait for 6 months and then refinance? Is that the idea?
So that's what I like to do. And the reason I like to do that is because if you set up a loan on this off the start, you're typically going to pay a loan origination fee, some setup fees, some points. And on like even $100,000 project, you might be paying $5,000 in fees to set up the loan, right? So it depends on where you're coming with where the money's coming from, what makes sense. So I have a coaching program, and a lot of my students do use financing for this, and often that's where you start. But once you grow this, at least what I do is I raise a lot of the money, right? So I don't need to I don't need to do the purchase loans. I usually just deal with refinance loans, and sometimes I'll do construction loans, but I usually try to avoid doing that just because there's more profit. And if you're thinking in your head, you're going, well, wait, Glenn, you're borrowing the money, so there should be that borrowed money in there. Where a lot of times, like in this case, with my partner, he brought the money, I ran the project, we refinanced all his money out 6 months after purchasing the property, and now I manage the property or manage the manager of the property, and he just gets to make the passive income, and we're split partners, right? So I do the active part, and he does the passive part. So there's no actual loan interest throughout the project. You could do this as a private money loan the same way, and you actually will make more money as a private money loan, but then you're making payments throughout. And ideally, the least stressful way to do this is to get rid of as many payments as you can, because otherwise you're paying money when you're not having money come in. When you're doing a renovation, there's no money coming in. It's all going out. So it's a little nicer to not be making payments to people.
Yeah. Okay. Back over to you.
Yeah, so this is another project we did in Dayton, Ohio. I think the examples, a lot of them I'm doing are in Dayton, Ohio, but I do invest in 7 different markets. So Florida, so Brevard County, Florida, Jacksonville, Florida, Dayton, Toledo, Cleveland, Ohio, Indianapolis, Indiana, Kansas City, Missouri, and then San Antonio, Texas, Birmingham, Alabama, and Huntsville, Alabama. So anyway,
Just on that point, I mean, a lot of people, when they talk about investing in one state, and I know a few of my clients who are investing in Florida right now, but they're probably reticent to invest in other states. But I always feel that you should go where the deal is. Would you agree with that, or do you think actually you should stick to one state? Clearly, you're not.
I think it comes down to what strategy you're using. Like, there's going to be strategies that work better in Florida. There's going to be strategies that work better in Ohio. There's going to be strategies that work better in Ohio or wherever you want to invest, right? So I think a lot of it is, can you do certain strategies in the wrong market? Yes, you can. But if you want to have like the least amount of stress and the easiest and the most profitable numbers, sometimes it's just not trying to force that round peg into the square hole, where it will fit and it will make you money, but you could make more with your money on certain strategies in different spots.
Okay.
Yeah. So this is a lease option. So for people who, I'm not going to go real high level on lease options, but basically it's a rental. But the tenant has an option contract to purchase the property. So there's two contracts, one for the rental contract or tenancy contract, and then there's another one to purchase the property. So, and these happen a lot in the United States, depending on where you pick. You can find a spot where people are moving to. A lot of times when someone moves across the country, they don't have the ability to get a mortgage when they first move. A lot of times they want to see 6 months of pay stubs in order to get the mortgage. So if, say, this person lived in Texas and they wanted to move across the country because they got a job at, whatever, military base or one of the car companies, a Jeep or something, and they wanted to move across the country to go to Toledo or to Dayton, they don't want to go rent a property. They'd much rather live in the house they're going to live. And so by offering them the ability to buy this in the future, it's a huge upsell for them. It's a huge advantage for them. And even still right now, it's a huge advantage because a lot of people are saying, hey, these interest rates are really high right now, but I believe they'll be down in a year, 2 years, 3 years. So they could sign an option contract and try to put the property in a mortgage and basically finance it from you in the meantime. And in the meantime, I can put a mortgage on this property. On a 6-month lease option like this one was, it doesn't make sense. But if you were going to do a 1 year, 2 year, 3 year, you could put a mortgage on it. You could strip your money out of the project, just like I did in the other one with the BRRRR, and then give them, and then they could rent from you at a higher interest rate. So some advantages to this is there's no realtors involved. I don't need to have a realtor. So that means I'm not paying typically the typical 5 or 6% realtor fees on this. So it saves me some money on the exit. I negotiate lower property management because I don't need them to do any maintenance because the tenants are going to be responsible for that in a lease option. I'm going to have lower property taxes because it's based on the purchase price that I bought it for. So say I bought this property for, well, in this case, $40,000, but I'm selling it for $90,000. The taxes aren't based on the 90, they're based on the 40, right? So during this process, they're going to be lower taxes. I'm going to charge higher rent because I need to have extra money to make, ideally set up a deposit for the tenant. But if they flake out and stop paying the rent, you can do an eviction very quickly. All that deposit they put down for the property, all the additional payments they put in each month are not the tenants, right? You're going to have better tenants because they have some skin in the game. They're going to be more likely to pay their rent because they have more to lose, right? And so anyway, in this case, the rents were $11.50 a month for 6 months, whereas I believe like market rent for this would be $9.50 a month. So you can charge an extra $200 every single month for the ability that they can purchase this property. Whereas if you just did a traditional rental, they don't really have the ability to purchase it at a locked-in price. They'd have to be basing it on whatever the market value is on the time, and then they have to, if you put it on the market, they'd have to compete with everyone. So the perk to this is you get 3 payments on this. You get money now, so when you first put the tenant in the property, you're going to collect a deposit from them. Money soon is where you're going to get money throughout the project. You're going to get cash flow every single month, and then money later when you sell the property. Like in this case, you're into the property for $48,000, and then when you go to sell the property, you're selling it for $90,000. So you're going to get another chunk now. So you get 3 different paydays throughout the project. So I love lease options. I teach a lot of different creative strategies, but this is just a way to exit out of properties where people will line up for this. If they did this as a traditional rental, I'll probably find like 3-4 qualified tenants that want the property and the property manager will pick from. But when I do this as a lease option, often you'll have like 40, 50 people want this because there's not enough options to purchase the properties. And if people are going, why don't they just go buy the house? Well, sometimes they can't because they can't qualify. Sometimes they need to fix their credit across those 2-3 years. Everyone has different issues, but there is a huge demand for this.
Anyway, on that point, I mean, if we have clients that are moving to the United States, back to your point, it takes 2-3 years to build up credit through tax returns or whatever, which could actually be 3 years. So this could be an exciting opportunity because sometimes when you rent a property, you're not sure if you're going to be allowed to stay beyond your initial rent period, where this does allow you, as long as you keep up the payments, to actually have a home and do it up as your home.
Yeah, exactly. Yeah, because people don't like moving a lot, right? Ideally, you like to find the house that you like, and this has a good curb appeal. But depending what your fancy is, what you're interested in, it gives you the ability to stay there.
Excellent. Okay, shall I move on?
Yeah, let's move on.
Okay.
And then anyway, and there's the typical flips. This is what all the TV shows always show. The HGTV shows always showing the flips, but we do flips all the time. This is one we did in Dayton, Ohio as well.
How much did the snow cost you?
It came naturally. I think typically, if you're wondering about what snow removal costs, depending on the property manager, it's usually $60 or $75 twice a month. Twice a month payments to remove the snow, to plow the driveways, to plow the sidewalks. But usually it's only my responsibility during the renovation. And the reason you do it is just so you don't get violations for not doing it. Right? So, yeah, you know, with probably the violations are probably cheaper than but it's just the right way to do it. You pay someone to get it done anyway. Yeah. But if you go down to Florida, you're not going to have it. They don't have snow there.
No.
Right? It's only a northern state thing, right? Or a Canadian thing, right? But anyway, this is the typical what a typical flip looks like. I usually like to be if I'm doing in Ohio, usually like to be around $100,000 for purchase and reno, in the sale to be around 150 to 160. So like I say, in this one, there's HGTV profit of $67,000. HGTV is a television channel in Canada. It does house flipping on it. But there's always other fees in this. There's like, you know, realtors, there's utilities. You know, sometimes you hire a project manager on top of the contractor just to watch the project manager watch the contractor, because that's, you know, if it's your first project, it's not usually a bad idea, because then you have a second set of eyes, but you can always hire a property manager or someone else to do that as well. Anyway, I think flip's pretty straightforward, so I won't spend too much time on that one.
Okay.
So a lot of people are going, why buy in the US? Well, we did talk about a couple things, but even compared to Canada, the cost of renovations is much cheaper in the US than in Canada. Minimum wage is a lot lower in the United States than in Canada. People get paid, you know, so you can get cleanouts done for a lot cheaper price. And when the minimum wage is lower, it flows through all the different, you know, up to electricians, plumbers. They're paid hourly less than they are in Canada, right? So in a comparison, the cost of renovations just typically is cheaper, right? And some of our materials in Canada come from the US. So there's this, you save, you want to buy stuff from Home Depot in the US versus Home Depot in Canada. It will be cheaper in the United States, right?
Just speaking from a day rate, how much are you typically paying for a good tradesperson nowadays, whether it's electrician, plumber, or...
The funny thing is about this is a lot of times they don't do it as an hourly rate. They'll do it as a project sort of thing.
Oh, okay.
Yeah, so they do try to stay away from that. And in all honesty, I'm all for that, because I would rather them, because I'm not there to watch them. Yeah. So I don't want them to just give me a bill for 6 hours. I'd rather have flat rates for everything, right? So like, you know, to rewire an entire house would typically be like $10,000. You could shop around, maybe get it down to $7,500, something like that, to do a full rewire, like in that kind of price points, which is a lot cheaper than Canada. A lot cheaper. So scalable in the United States. You want to do this at big. You want to start with just a couple to get this ball rolling. You want to create if you're like me, you want to create a system. You want to build your wealth, a lot of wealth. You want this to be generational. You want to help your kids out. In the US, they actually want to lend to you. So in Canada, when you try to go for a loan, it's tough. It's a lot of hoops to jump through. It's providing a lot of documentations, and lenders in the US, in comparison, they are there to lend. They get paid when loans go through. They will find, like if you go to a mortgage broker, they will find you a lender that wants to work with Canadians, that wants to work with someone who's from Great Britain, right? So they want this to do it. And there's not a restriction. Like typically in Canada, they're only going to let you have like 5 loans in your personal name, or different restrictions for corporations in Canada. But in the US, it's just infinite. It's not about you. It's not about how much money you make. It's about how good of a project it is. So it's more like commercial lending than residential lending, even if you're buying a single family house. So it's a lot different. There's so many lenders. This came up from their crash in 2007. All of these DSCR lenders, which are debt service coverage ratios, which just means that they're basing what rates you get by how good a deal you find. They're everywhere. And they showed up because the banks stopped lending, like the big banks stopped lending during the recession in the United States. So all these other lenders, which are kind of a hybrid of private and still institutional. They still have regulations, but there are so many of them out there, right? So this is available to Canadians. This will be available to people from Great Britain because it's not based on you. It's based on the project, right? They will reward your experience as you grow. So now I'm offered 100-100 loans, but that means 100% of the purchase price can be financed and 100% of the renovation can be financed. That's what it is. Typically, when you're starting in the US, it's probably going to be a 70-100 or an 80-100. Sometimes you can get 90-100s if you shop around, but then interest rate's going to be a little higher. But once you have some experience, they will finance the whole thing. You're just going to have to pay the loan setup fees, right? So that makes sense when you're working in Florida, when you're working in Alabama, and you're working in Texas, when the loan prices are more expensive. When you're talking about a $100,000 house like Ohio or Indiana, it doesn't really make sense to pay the loan setup fees still. So anyway, you can grow as big as you want in the United States. We can skip through this next.
Okay.
Some of the barriers, downsides, I'm going to just sort of glance over these because I think Kris or Simon are both going to be talking about this, but you're going to be filing taxes in 2 different countries and you want to avoid double tax. So to avoid that, you want to work with somebody like Kris or Simon because that's what I do. I literally have sent Kris 2 emails this week just to make sure I was in compliance, just the way I was moving money around, right? So that's what you want, is somebody on your side who understands both sides of the country to keep you out of a double tax situation, because both of these guys can do that, right? When you file taxes, you will be filing in the US first. They'll give you, was it a K9, K1, and then you can file your Canadian taxes or your Great Britain taxes with that. I assume it's the same for Great Britain for that part, but that's why I hire accountants. So I'll leave that in their ballpark or their court. You need to set up your entities correctly. Kris can set up entities. He can do that. There's several people who can do that for you in the United States. LLCs are usually a no-no. I even heard Simon talk about this before we started. It's a no-no for people in Great Britain. It's a no-no for people in Canada. But you also don't want to just do this in your personal name, because you won't want to get stuck with what's called FIRPTA, which is a foreign tax, which means you're going to pay a 15% withholding tax when you sell a property, which you just want to avoid, right? So easy enough to do that. Simon understands, and we were talking about it beforehand. You set up different entities, right? So it's just one of those things I always put out there, because when you talk to Americans, they're always pumping the LLCs. Not good for us out of country people. Which country do I file my taxes in first? The US first, and then you file back in Great Britain or in Canada. Every year there's new laws, new restrictions. This year there's not a lot of reporting in the United States for Canadian tax residents. There's FAPI, so don't worry about that. I was just looking to Kris before this. I should have removed it from my slide, but it doesn't affect people in Great Britain. But it's just new Canada Revenue Agency taxes that they put in, and you just have to work with accountants that know their way around this to make it most tax advantage for yourself. Okay, we can go through the next one. Things you're going to need to get this set up. Some of this stuff is going to be really obvious, but you're going to need your bank account, obviously. I suggest we're doing this in a corporation. Like I said, these accountants here can set that all up for you. Your ITIN number, which is an International Tax ID number, I believe. I might have butchered that, but this it's like similar to what a Social Security number is. It's a 9-digit number. It works the same. You put in all the forms that the Americans will put in their SSN. You're going to put in your ITIN. So it's because you don't live in the United States, you're going to need one of these. Corporate structure, and also Kris can set the ITIN up for you as well. But corporate structure, you need something for doing asset protection, for lending, to avoid getting taxed on stuff you shouldn't do. For money, you're going to need money to do this, right? So a lot of it is just to figure out lots of creative ways to do this. So your own money, you can use a home equity line of credit, a line of credit. You could use banks, which is a traditional lending. You could use private money, which would be a promissory note typically, or secured on the property. And you can do joint ventures, right? Which is, I do all of these things, right? It's just about finding the one that makes the most sense for the project. Teams, contractor, property manager, I think I put contractor there twice. Realtor, wholesalers, attorneys, and title. And that's the thing. There's a lot of different things that exist in the US that don't exist as readily everywhere else. Like wholesalers in the United States, there is millions of them. And they are in the business of shopping to try and find distressed properties for you to take on. It may not be what you want to start with, where you might want to start with a renovation. You might want to start with something that's pretty turnkey or ready to rock right off the start. But as you grow, you're going to want to build up these contacts with even realtors that specialize in short sales or foreclosures, so you can get the super discounted deals, right? You're going to need to build systems as you go. So what I usually say is, as you do every single step, record it, because everything's repeatable. You want to build this into a system so that you can repeat this easily, and you don't want this to take away from your time. Like, I'm sure you have a 9-to-5 job. You don't want to have another job doing real estate. You want to build a system so that somebody else can run this, or the system can run itself, and just have someone, even a virtual assistant, check up and run the systems for you, right? Currency conversion. So you don't want to, typically, you don't want to pay what the banks are offering you as the exchange rate. They usually take a huge chunk, up to 2%, some banks, to move money from Canada to the US. So Currencies Direct, I believe, is based out of London, England. I've used them. I've had them as a guest on my show. They are a way to get discounted stuff. You know, to get your money over to the US and not be paying an extra 1-2% that some of the banks will charge you. Okay, we continue on. And yeah, American banks, I kind of talked about the construction loans. So they're going to be doing asset-based lending, like I was talking about. I kind of touched on this before. Construction loans, 9100 is typically what you'll get. The one part that a lot of, if you take any sort of training from other people, they leave out the 70% of ARV. They just think that I can get this loan completely covered by the bank, but they typically don't. They cover up to 70% of the ARV. That means that you need to buy a good enough deal. That means if it was a $100,000 ARV, you need to be purchase and reno to be at $70,000 in order to be able to actually get these numbers, to be able to get the 9100 loan. Otherwise, they're just going to claw it back and turn it into an 8100, a 7100, right? They're just going to keep clawing it back until it makes sense. And if you're not going to meet the requirements of those loans, the lenders just aren't going to do it, right? So a lot of this is just understanding what the lenders are looking for. And even part of my course is understanding what the buyers are looking for, because they're going to be using Fannie and Freddie, Fannie Mae, Freddie Mac, and all the lending programs, FHA, VA in the United States. And you kind of need to know a little bit about their programs, that you know you're building properties or you're renovating properties to the standards that the buyers can actually qualify for the loans. Otherwise, you're going to get shocked when you go to sell these properties. Anyway, I feel like I'm taking way too much time, so we'll kind of skip along here.
Well, before we do, actually, one point you talked about on the previous slides about interest or loans and financing. What kind of interest rates are people getting as an expat? So you obviously help a lot of Canadians. Hopefully, you guys are going to be helping us Brits as well. So you're going to have to do a lot of rebranding.
Yeah.
But I guess the concept of interest, how much are people paying, you know, as an American versus an expat?
Yeah, so typically if the Americans are getting, say, 6%, you're probably going to end up paying about 0.5% higher.
Just half. Okay, so not much more.
Not that much more. Like, but sometimes it is based. They do factor in experience. So sometimes on your first property might be 1% higher than what they're doing, right? And the thing is, you have to compare this to other DSCR loans. Don't compare it to what the federal rate is and what they're saying, because that's typically like a Fannie and Freddie Mac loan, which is government backed, right? So we're not talking about government backed loans. We're talking about DSCR loans, which means the money is typically, instead of coming from a bank, it's usually coming from an insurance company or an actual investor, right? So you have to compare apples to apples, right? And then add 0.5%.
Okay, perfect. Okay.
Yeah. So right now that is sort of sitting around in the field of probably 7.5% is what you're kind of looking at. So to me, but it is dropping. I just heard that they dropped the rates today. So
Okay.
yes. So one of my students who works for PNC, he just said that they dropped the rates by 4%. Not the Fed, but
Okay.
what the lenders are doing. They're dropping, so kind of like sometimes even though they'll do a minus, so like a prime minus,
Right.
or whatever minus, so they're selling, they just dropped 0.25% for a lot of loans today. Anyway, if you guys are interested in this, I'm not a salesperson. I don't know if you got that from my vibe, but reach out to me. I have some questions. You're wondering if there's a fit, or just wondering. I'll be honest with you. If you're doing something and I don't think it's something that I'm interested in coaching, or something maybe that I'm not experienced with. I'll just straight out tell you, and I'll just connect you with somebody who is experienced in this. I do a lot of strategies. I do a lot of creative purchases, but I don't do everything. So, but I do have a podcast with a lot of great guests, and I know somebody that does everything.
Just on that point, Glenn and Kris, I noticed that a lot of my guys were emailing me saying they can't get in. So whatever technological issues I had at the beginning, it looks like it continued, but this is recording. So what I'm going to do is send it out to them, and then I'll put it straight to YouTube Live straight after we've done this. So no one will miss anything. But there'll be some Q&A, and I'll redirect that back onto you guys as it comes in. Just on that point though, Glenn, obviously you talk about coaching and supporting each team members. What about deal sourcing? Do you have anything like that whereby you talk about here's a deal, either joint venture with you or actually you're selling the deal because it's not something that you are wanting to get involved with at this point in time?
Yeah, so there is some of that, but it has to make sense. So I know that if a deal will work for an investor, and I know if it's designed for the kids bust alarm. But I also know that sometimes it makes more sense to sell it on the open market because it's too close to retail.
Okay.
So I do sell some privately. I do a tiny bit of wholesaling, but sometimes it's just I found something, and I'll just be completely honest with you why I'm not buying.
Okay. Nice.
So yeah, there is some opportunity.
Okay. Perfect. Okay, I will get the questions over to you as they would appear. So over to you then, Kris.
Great, thank you. So,
do you want me to make you the host?
Sure, I can give this a try.
Let's give this a go. Right, so make co-host. Okay, should make co-host. You should be able to go to that. Is letting you do anything? Okay, good. Here we go. Yay.
Yep. So thanks very much for the introduction, Simon and Glenn. So I'm here for a couple of different reasons today. Partly because I helped Simon and Glenn get connected. I do a lot of work with Simon related to international tax work. So people moving from the UK to Canada or Canada to the UK or vice versa, as well as a lot of these same people have holdings in different countries, in particular in the US. I've been working with Glenn for a long time, and so especially from some of the conversations I had with Simon, I noticed that the UK residents are facing many of the same challenges that the Canadian residents are. And so really there is a huge opportunity here for UK residents to take advantage of. And the US market is open to everyone. As long as you, as Glenn said, as long as you know what you're doing and you've got the right teams, there's a lot more opportunity to do this. Just as a simple historical point, 5 or 10 years ago, this wasn't nearly as popular, let's say, for Canadians to invest in the US. Maybe they would have a condo down in Florida to get away from some of the snow that we saw on one of the previous slides there. But other than that, it wasn't like this huge thing. But between the rising costs of property, interest rates, regulations, landlord-tenant board considerations, a lot of people are just taking their dollars and investing in the US because, as Glenn demonstrated, you can find some incredible deals, especially once you get a little bit of experience and find the right teams to work on things. The opportunities are just incredible. I almost wanted to stop Glenn on his one slide and say, repeat that just so everyone can hear you. You bought a house for $17,000, right? Just because otherwise someone from Canada or the UK could be forgiven for thinking that was a typo. Oh, I'm sure he must have meant to say, it was 217 or something like that, I'm sure, right? No, it's the deals can be unbelievable in the US. And so that kind of brings us to this structure here, which is, this is by no means a final recommendation. There are structures that are sort of articulate off of this. For instance, you can have a UK holding company and a US holding company sort of added on to this. That's quite popular. I'm just sort of looking at the base level of how this works. So typically the structure you'll start with in the US is something like a limited partnership, which then, so a limited partnership in the US has two categories of partners, limited partners and a general partner. And so it's very typical to actually create a C Corp that owns 1% or something like that of your partnership. So in other words, it doesn't have any equity, but it has all the risk. And so this is a common practice in terms of how to get away from liability, because we've talked about all of the upsides, which are many, many upsides. The only real downside to doing business in the US is it is a relatively litigious place. You know, there's a reason they have so many commercials. If you ever watch American television, every fifth commercial is some sort of an injury lawyer commercial or something like that, because you know they really leave it to the private market to resolve a lot of its issues, and so it's really quite common for landlords and tenants to get into it legally, or with contractors if you're doing a flip and so on. So interestingly enough, this structure is you know, well approved by courts all across the US. They would almost think you're silly if you didn't do something like this. You know, if you went in and said, "Oh, I own a house in my personal name," they would probably say, "Well, why would you have done that in the first place?" And so so having the C Corp operate as the general partner in the limited partnership, so it'll be 1%, let's say, and the other limited partners there can be as many as you like. You can actually do this just with yourself, so the two partners could be yourself and then your C corporation. So when it says a limited partnership, what's limited there is your liability. So if you're the one investing the money, you're a limited partner, and then that essentially means that those dollars are not considered at risk in that sense. So you can't be sued as the limited partner, only the general partner can be. The other thing that this enables is you can have as many partners as you like. So as Glenn mentioned, if you're doing a joint venture or a syndication, let's say, you know, 2 or 3 people are going to pool their funds together and you know, flip a house or something like that, then you would name your limited partnership, you know, 123 Maple Street, and then the 3 of you would be partners in the 123 Maple Street partnership. Typically, the limited partnership will also own an LLC. So it's not that Canadians and UK residents can't have them, it's just that they shouldn't go directly to them. There still is a place for them in the structure, and usually it's at the very bottom. So an LLC would, let's say, own the title to the property, it would act as the landlord, and then it would be the title holder. The limited partnership would hold all the equity, and this 1% C Corp would take all the risk. From that point then, how you choose to hold your interest in the property is up to you. You know, I'll let Simon go a little further into this later, but it is quite common to, let's say, have a US holding company as well. So this little sort of snippet is the repeatable portion. So if you have a US holdco, US holding company, you really would more than likely only need one of those. And then for all the different deals you do, this would be like your deal structure. So if you have if you have some under your own name, it would be this. You have one set of partners, you set up an LP with them, do a deal with them, and then you have another set of partners and another property, you set up another LP. You can get these to do have some longer longevity. If you have a partner, for instance, that you really like working with, you can set up an LP and just keep doing flips or buy and holds with that partner. Also quite common is just, you know, to pick a set of partners for a certain deal, form a partnership, and then once the deal's done and everyone's gotten paid, then that gets liquidated and you can do another one. So,
Kris, from your perspective, would you always recommend to have at least, whether it's an LLC, a C corporation, or partnership company, to have one company for one property, and then if you buy a second property, that you always use another company? Would you agree with that, or would you say something else?
If they're cheap enough, you could maybe hold 2 properties in the same LLC at the basis, especially if they're in the same state. You would certainly always have a different LLC for a different state. This eliminates the possibility of, from an interstate perspective in the US, being considered a foreign corporation, as in out of state. the US, in some respects, is like they're like 52 little countries, right? So if you have a Florida LLC, it wouldn't make sense to have a property in Texas held by the Florida LLC, because you're introducing a term that I've coined, which is legal quantum weirdness, because now you're starting to create questions surrounding, well, is the tenant going to take you to court in Texas, or are they going to take you to court in Florida based on where the entity is and so on? So to some extent, when you do things like that, or you shift the property, you shift the corp around, you're sort of opening additional doors that people can try to go through if there's a liability issue. So if you really wanted maximum protection, it would be one property, one LLC. The filing requirements are actually not that bad. Setting up additional, so you could use the limited partnership as many times as it's fitting. Like, let's say you were just talking about your own properties and you're not taking new partners for new deals. That limited partnership and that C corp can last you as long as you like, and you would just have to set up new LLCs for those. Yeah, so this is kind of a recap of some of what's been said, but I just want to summarize it and take it down a little bit. So in terms of the US to UK markets, you know, the rent dollars you could take in versus the capital that you have to be out of pocket to earn those rent dollars. In the US, it can be quite high, especially given some of the examples Glen used, where if you can find a deal on a property, renovate it, you know, especially when you start talking about multifamily, you could end up with a triplex or a quadplex with 3-4 units in it and not have paid more than $200,000-$300,000. That's I've seen that happen. Another thing that I think goes under notice sometimes is just the sheer availability of properties. There are so many properties in the US that are fitting for this kind of thing. It's an unbelievably large market. As Glen mentioned too, financing, not really just the rates, but in terms of how the deals are looked at, it tends to really be looked at from as an accountant, the way I would look at it is it's a balance sheet driven business. And so if they like the deal, if you have a good balance sheet, so once you've got a few properties under your belt, especially if they've gone up in value, the banks are not really quite as obsessed with things like your personal credit score. Like, obviously it'll help if once you have one and if it's good, but they're not going to just look at it and say, well, you have 5 mortgages, so you're cut off, or you have 10 properties, so you're cut off. It really is the other way around. Especially once you've been doing it for a little while, you know, if you have a good balance sheet, they're your best friend. Landlord tenant considerations, I won't harp on that one too much, but in many states in the US, because this goes state by state, the states are still somewhat landlord friendly. And so you don't end up with, let's say, really unreasonably long eviction periods if people aren't paying, or, you know, if you want to do renovations and increase the value of your property, increase the rent, all that kind of thing. The US states are much, much easier to deal with. And lastly, the 1031 exchange. So just as a small note, Canadians can't use that, but in the UK, if you're structured right, I believe you can. And that essentially is just a tax deferral.
Well, actually, a 1031 you can't do anymore in the UK. Yeah. So just on that point, actually, it's worth, could you just explain what a 1031 is and why it's so beneficial to investors in the US? Because if you've got it in a C corporation, can you still use a C? You can still use a 1031.
Yeah. So US tax residents, and we should maybe make a point here. So anyone in the world can use a 1031 exchange. It's just depending on the tax regime in your home country, it's probably not a good idea. So for instance, for a Canadian, it would result in double tax because it messes up the timing between the credits that Canada Revenue Agency won't give credit for. So the problem is more so that the foreign taxing authorities don't recognize this. So what it actually is, for anyone who's a US tax resident, is you can flip a house as long as you've held it for a couple of years. So not one after the other quickly, but let's say you do a buy and hold, you buy a house, you reno it, you rent it out for a couple of years. You can then sell it and buy a bigger property without paying up the capital gains taxes at that point in time. So essentially it's, for those who are familiar with the BRRRR method, buy, rent, or refinance, rent. It's just like a hyperdrive version of the BRRRR method, because you can completely sell the property with no capital gains, and then as long as you buy another similar property within a specified period of time. And similar just means like a residential property. So if you sold a 5-unit and you bought a 10-unit, that's considered similar. It doesn't have to be, it just means you can't trade a house for a stack of gold bars or something like that. That's all it really means, right? So then similar just means like real estate essentially. So with maybe a few notable exceptions like agriculture and so on. But basically that allows you to supercharge your portfolio of properties, so to speak, the same way that money in a registered account grows on a tax deferred basis. You can grow your portfolio on a tax deferred basis. For anyone who's kind of interested in learning more about that, I actually did a podcast on Glen Sutherland's podcast, all about immigration, emigration. And this is sort of where we get into people that have a secondary interest in all of this. And what I've really found in my practice is there's two types of people that come to me. There's people who really like this as an asset class. They're really interested in the returns on these investments. And there's other people who are maybe a little more interested in moving to the US as well, or maybe getting an E2 visa, getting a business visa, maybe spending more time in the States. And those are the folks that are really starting to look at whether or not they have some immigration, emigration questions, and maybe they are starting to consider whether or not it's better to become more of a US tax resident than a Canadian or a UK tax resident. So they can start taking advantage of even more of these things like the 1031 exchange. Yeah, so that's a good segue into this next question about, so do you need an E2 visa? So when Glenn was talking about management teams and so on, I would say maybe I'll talk about geography. I won't give too long of a geography lesson, but some places in the US are somewhat close to Canada. So for instance, I live in basically Niagara Falls, Ontario, and so I'm about 15 minutes from the US border. So if I wanted to go and look at a property, let's say in Western New York State, it's a 30-minute drive. So I would be a person who's tempted to cross the border and go do some work. But there are many places that really, really aren't. Like, truthfully, to get to Florida from Canada as compared to the UK is maybe an extra 1 or 2 hours flight. So it's not really any easier for me to go, touch hands on that, other than to say I can drive there, and by definition, you have to fly there. Other than that, it's not really that much closer. And so, as Glenn pointed out, many of the people who are doing this actually don't ever set foot in the US. They're using property managers and remotely managing contractors. If you did want to go there, though, a lot of the time the difference is whether or not you swing the hammer, so to speak. So if you're physically doing work, then there's a good chance you'll need an E2 visa at some point. Glenn and I are actually very well connected with lawyers that are specialized in this for real estate as well in the US. And so the E2 visa essentially allows you to do more boots on the ground work. So you should consider getting one if that's what you want to do. You don't need one, though, to do all of this, all of the paper side of the transaction, even to go to the States and look around at some property and sort of return, just to meet people, meet contractors and so on. You don't really need a visa for that, or at least not an E2 visa. The E2 visa in itself doesn't dictate taxation. So you can have an E2 visa and spend 1 day a year in the US. You can have an E2 visa and spend the rest of your life in the US as long as it keeps renewing. And I know people who do both. So that opens some interesting doors in the sense of it allows you to spend as much time as you like, as much or as little in the US. You can start building some US credit, start building, other connections there if you want, social connections. And it does offer an opportunity potentially to shift your taxation. And for those who may not be familiar, US personal taxes, for example, in the vast majority of cases are much lower than Canada and the UK, especially if you live in a no tax state like Florida or Texas, for example.
With great exception to New York and California.
Yeah, what I tell people is like New York and California are practically the 14th and 15th provinces of Canada. They're almost as bad. So if you're talking about property in LA or New York, you're basically back to the same dynamics as we have in Ontario and British Columbia and so on. So then in terms of transfer pricing, this is a little bit more of an advanced point, but you can keep track of your time as an entrepreneur. You can do intercompany billing with some of these. So there is an opportunity to repatriate funds. There's also an opportunity to manage your tax bill and sort of arbitrage the tax rates a little bit between the jurisdictions. You have to be reasonable, use reasonable hourly billing rates, keep track of your time, keep track of, document your work when you're doing property analysis, take screenshots, do your spreadsheets, keep them, don't delete them, document your work so that you can justify management fees, because that's an area where Simon and I put our heads together and we look at whether or not it makes more sense to leave money behind in a certain company, move it back to the UK, and also sometimes shift the income from passive to active. A very simple explanation on that is things like flipping our active income, whereas almost Airbnb arbitrage would also be a good example of an active business. Just about all the other ones, if you have a short-term rental, Airbnb, or a buy and hold with like long-term tenancy, those are all considered passive. On the US side, it isn't until you're almost doing this full-time that at some point the IRS makes a switch and starts considering you to be actively engaged in real estate. Yeah. And so just a little bit about our firm so you know who we are and what we do. So we're in Niagara Falls, Ontario, 2 partners, myself and Mark Ledev, 12 staff, growing and hiring quickly. So we're a cloud-based firm. We have clients in Canada, the US, the UK, and we've been around since 2011. And sort of as Simon and Glen said, if I don't know the answer, I definitely know the answer. Since we're referencing New York, if I don't know a guy, I know a guy who knows a guy. So we can always find someone who can help you with all these needs. And even though we're sort of aiming our presentation today at US, UK, and Canada, if you don't fall really cleanly into that and you have tax matters in another country, we can still help you with all of your inbound needs for the US investing. So there's my contact information. If you want to hear a little bit more from me, you can actually look at the Glen Sutherland, a Canadian Investing in the USA podcast. I've got 2 episodes on there. One of them is all about immigration, emigration, and those tax things. Another one is a what not to do, just because there's lots of opportunities to get yourself in trouble with this. So I really do encourage you to rely on all of your professionals, because there is a lot of misinformation out there on Google, or just not that it's poorly motivated, but it's a lot of people who aren't really very familiar with this kind of going back and forth trying to figure it out, and they're not really professionals who deal with this all the time. So if you do have any questions, you can go to our website. You can use our web contact form. Also, feel free to sign up for our newsletter, where we can give you other helpful tax tips about real estate.
Perfect. I'm just going to take control over that, if that's okay, just so we can go back to one slide. So let me just take that, Kris. So I'm going to go back to your slide. So there you go, keep it there. So people listening in may be saying, okay, well, how does this all work with Optimize, with Kris, and with Glen? Clearly, from our side, we pretty much are professionals in the game, but what we do know is our limitations. So the idea behind this is to build a team. So we know that people want to invest in property and they want to do it right. That's why we are going to do this triangulation effect. And there may be 4 or 5 other, 2 other people that may get on board if Glen and Kris feel that it's necessary. Talking of which, Glen, I'm going to bring you back on, because are you the guy that got the E2 visa from the lawyer who talks about real estate investing which allows you to get an E2 visa, which if you shop around on Google, they always say you cannot get an E2 visa by just real estate. It's not possible. But you are proof in the pudding, aren't you?
Yes. So I do have an E2 visa. I did get it through real estate. The trick to it is it can't be, because when people think of real estate, just like Kris mentioned, they think of it as passive, right? You're buying something, you're having a property manager doing it. You have to build an active business. So like the way my E2 visa, if anyone wants to know about this, just reach out, and I'll probably even do a podcast on it, on how I did this. I probably should, because I've been asked a couple times, but it comes down to building an active business. So it's a lot of times, and it also has to be simple, because the people who are granting these visas are not professional business people. So what you'd like to do is what I did was a flipping business. And so you just have to show the whole process, how it all goes, and what has to happen, who has to be called, and you have to make it into an active business where you're hiring people, and yeah, that's basically the 100-foot level of it.
Yeah. No, good. And to be fair, I am going to bring you back on this show, and we'll make sure I get the technologies right so it is properly live. But I think the E2 visa is really exciting. And Kris, do you have an E2 visa as well then?
No, not yet. That's one of my to-do list items for this year, actually, because our next move as a firm is actually to expand into the US. That doesn't sound quite as exciting, in the sense that I might only be going 20, 30 minutes down the highway to just sort of poke into, Buffalo, New York, or Erie, Pennsylvania. But that's actually been an in-demand item for us, because then we can offer other services like acting as a registered agent, hiring US talent there to have US based employees. And so our firm is also moving further into the space. Glen kind of mentioned this earlier, but at your question about, like, do you ever help people find deals and line up money and find partners and so on? And so, like, our firm is moving further into that space, but a lot of people in the community that Glen is a part of will act as what are known as deal runners. So there are people who will find deals and create them. You could probably meet a lot of them through Glen's mastermind group, actually. There are also a few other capital firms that essentially will go out and find larger deals, put together, and then you really just have to jump in as a passive investor. So if you want to kind of get your feet wet a little bit, that's actually a really good way to do it. Or if you have a bit less capital, so if you have $20,000 or $50,000 and someone's looking for a partner to finish a deal with, they may already have quite a bit of this set up, and all you would really have to do is say, okay, I'd like to invest in your deal, and then they'll give you the term sheet of what all that entails, and you can just be a limited partner, and that's it. You may not have to go spend a few $1,000s with a lawyer to jump into your first deal. You might be able to go straight in. The only thing I would say is, connect through these communities. I wouldn't just sort of go on Reddit or something and say, hey, I have $30,000, who wants it? That's a bad idea. I'm sure someone will say yes, and they won't be the person you want. But once you get sort of into some of these communities, like I said, that a lot of them that Glen and I would know, I've seen lots of people do deals with each other. People are at all different skill levels. So I don't want to say it's like the buddy system, but a little bit sometimes. Some of the newer members will maybe try to find a more experienced member and say, hey, I've got some money. Do you have any deals? And can I jump in with you? And most of them are more than happy to, because this is a very, very open space. It's not, we're obviously not trying to hide our secret fishing spot here, so to speak. Like the people are more than happy to share the information. You can also, in these different like mastermind groups and so on, you can talk about which contractors have been used, which banks are being used. You can avoid all the pitfalls just by working with other people and talking with them. If you go out and do it alone, you'll definitely learn a few lessons the more expensive way. Whereas, a simple conversation with a group of experienced investors who can say, oh no, I've used certain firms before and I don't do that, or I've tried to do a flip in a certain place and I ran into all kinds of problems in that county or in that state or whatever. And so that would be my biggest takeaway, is that Glenn and I can help you, connect you with those sorts of people. They're definitely out there, and that's probably the easiest way to get involved in this upfront.
Good. So I was just trying to move my mouse and I flicked over a page. Apologies for that. So there's good reasons to invest in real estate property in the United States compared to the United Kingdom, and I'm going to run through them. Obviously, anyone who's been investing in the UK for some time, like I have, you've been hit by the government in many ways. So in the UK, and Kris and Glen, this is going to be really useful information for you. So we've now got issues with evicting tenants. We will have a no fault eviction clause brought into the UK. So that basically means you can't evict a tenant, full stop. So unless there is a genuine fault, you cannot remove them, no matter what you try and do. So the government will protect them. In addition to that, they are bringing other cases whereby it's going to take 6 months before you get a tenant out. So you're going to have easily a tenant that doesn't pay you for 6 months, and they stay in your house, they trash it, then they leave, and you are left with 6 months void period, and you've got to totally refurb your property again, which can cost you thousands and thousands. So in addition to all the legislation BS that the UK decided to bring in, which there's a change in government, and I can't wait, to be fair, but then whatever clowns bring in the new government, I only fear as well. So from a tax perspective, there's a big difference between US and UK taxes, and you'll see the amount of tax write-offs, tax deductions that you can get in the US compared to the UK. So professional services, and I'm talking about here letting agents, lawyers, accountants, they are allowed in both countries. So it gives you a kind of a starting point. Mortgage interest, as we know in the UK, is under Section 24 mortgage interest relief cap, means you only get 20% tax relief on whatever the mortgage is. So if you're a high rate taxpayer, that means you only get basically half of the mortgage interest as an allowable deduction. If you're a 45% taxpayer, then obviously it's less. In the US, the mortgage interest cost is fully allowed. So there's one advantage. Repairs and maintenance. So if you're repairing the cupboards in the kitchen, you've got some tiles on the roof that you're repairing, fencing that's falling down in the garden, all of that is repairs and maintenance. Those costs will be fully allowed in the UK and US. In the UK, you are allowed full tax relief on replacements of items such as a kitchen, if you're replacing like for like. A bathroom, replacing a like for like, you will get a full 100% deduction. Now, in the US, not so much. What you have to do is capitalize those costs, but you will get bonus depreciation. You'll get other depreciation types that allows you to write these things off over a period of time. But what the big thing is, the difference is in the UK versus US, is you are not allowed depreciation in the UK, depreciation on the building itself, but in the United States, you are. And that is why most people do not really pay too much taxes on real estate in the United States. Mostly you pay a lot more tax in the UK. And here's an example of that. So here you might have professional services. I've used conversion rate of 1.25, so £2,000 equals 2,500, say. That then is allowed in both setups, no issues there. Mortgage interest costs, as I said before, you get a 20% tax reducer, but it's a 20% tax reducer if you've made profit. So if you've not made profit, you'll get no reduction at all on your mortgage interest costs. So that's really quite a painful calculation to do, but we could pretty much say it's no tax relief at the beginning. And then that it could be $5,000 that you can benefit in the United States. So that's a huge, are you just looking at those two numbers already? You're thinking, well, wow, what's going on here? Repairs and maintenance, you can get the tax write-offs in both the UK and US. There's no difference there. Replacements, you can get £5,000 worth of replacement. If you replace a kitchen, for instance, then that £5,000, sure enough, will be tax deductible. But do you get $15,000 worth in pounds as a depreciation write-off for the building itself? No, you don't. So straight away, what you're looking at is equivalent of around about, I've got the numbers wrong way around here, but it's about £10,000 in the UK. But look at that, $26,000 write-off in the US. So immediately what should be bringing to your mind is, well, how come the US is so friendly towards property investors, real estate investors, compared to the UK? And the UK simply, I've just done a recording actually on our YouTube channel saying the Conservative Party hates landlords. And in that video, I talk about on the last 7 years, the Conservative Party have done something destructive to landlords. In the US, they are much more favorable. They will give you good write-offs. And if your name is Donald Trump, then you don't pay taxes on your properties, but albeit there is a bit of a scandal in terms of property valuations. But that's another story altogether. So that's it in a nutshell. And yeah, depreciation of the building, 27.5 years or 30 years of the building value, not the land. Depreciation is clawed back when the property is sold, but there are ways of getting around that depreciation recapture as well. But overall, I think it's a lot more. You get a better, in the UK, we call it return on investment. In the US, they call it cash on cash return. They are pretty much the same equation. Now, in the US, you can get much better cash on cash return. As you saw from Glen, 17,000 for a property. Never, right? Where are you going to get a property like that? Even in Scotland, you're still talking at £50,000, right? And it's cold there. Not as cold as Canada, I have to say. But you cannot get those returns in the UK like you can in the United States. You cannot get the tax write-offs as in the UK as you can the US. So that's what I'm saying to you all listening to this. You should be looking at the US to invest your money in the future because you get a much better return. So just on a couple of things that we talked about, and I just want to put this slide in here, which is tax structures. So if we think about self-employment in the UK, it basically means you've got taxes in your personal name, and the legal aspect is you're personal responsible. So if someone sues you, your personal assets could be attacked, and that's pretty much the same as the US. We're not so too concerned about it in the UK, but if you're trading in the US, you should be, because you can get sued by someone tripping over a tile on your floor. They graze their knee, they could probably take you for $50,000. It's absolutely crazy in the US. So you do need to be making sure that you have got legal protection and you're using the right company. And this is where we talk about LLC. Now, an LLC is taxed at personal level or corporate level. Now, that's the United States, and that's what lots of CPAs will tell you. If you watch all their YouTube channel videos, they will say an LLC for property investors is the right thing. But as the guy said, in Canada, in the UK, it's not so attractive using LLCs for tax side of things. It does give you legal protection, and that's totally fine. But my favorite really is and Kris did a brilliant job to say about how C corporation is part of that structure. It does give you a corporate level tax. So it's 21% on the country federal rate. And depending on where you are, Florida, for example, is about 5.5%. So you pay 26.5% in total taxation under a C corporation, which is very similar to the UK at 25 if you're over £250,000. So it's very similar. But one thing you can do is leave the money in the US. If you have property in your own name, real bad mistake, by the way, the personal profits that you make, you might get nice US tax treatments, but if it's in your name and you're living in the UK, then that profit will be pulled back in to the harsh realities of the UK tax system, and you probably pay up 2 or 3 times more tax because you've pulled it into the UK. It's under your personal name. The same with an LLC. So it's really a dangerous sport to play by having it in a wrong tax structure. UK limited company, and again, Kris talked about you could have a holding company with a UK arm that owns a C corporation, LLC. That's totally acceptable as well, and we do work with clients to help do that. And Kris and I are already working with a couple of my clients who are based in Canada. We're probably going to be doing an awful lot more work, so you'll see a lot more from us in the future. And it says here, LLCs may be taxed at your personal level or corporate level. There is an election you can do, but again, you have to be careful. It's not taxed in the same way in the UK. It's always taxed in your own name. So I apologise for the fact I had technological issues. It looked like the links all work for myself, Glen and Kris, and I think Patrice is also with us. But for everyone else, I think for whatever reason you couldn't get the link, so it just didn't work for you. But I will be putting this out, so you'll get that. There will be opportunities as well to get questions to Glen and Kris, because I'll put their contact details in there. A question to you, Glen, Kris, because I'm quite keen to do more of these things as we go along. Is there an online community that I and my clients can be part of, or can we all set something up so we can do something joint together for a community-led approach?
So I do have a Facebook group that anyone can join. It's a public Facebook group by the name of my podcast, which is a Canadian Investing in the US. So there's, I think we have 6.2 thousand members in the group, just
right.
We were interested in investing out of country. But we could set up the exact same thing for, for Great Britain. I don't see why not. Or we could use it there as well. But I think there also could be one that's specialized for Great Britain, because you just talked about a bunch of things they're specializing, right? So.
Yeah, no, that'd be quite good to do, because I think one thing I'm looking to try and do is develop some sort of deals portal that people can get access to, and it's a private one for our clients to be able to access for UK as well as US. But it'd be great to see if we can get something together maybe for the future on that one. So, so thank you ever so much, Glen, and thank you ever so much, Kris, for being with me today. Apologies for the technological issue. I'll make sure that doesn't happen again. But it is what it is. But for a start of a turn, it's great to have you part of tonight. I will get it out to all my clients so they can see this, and I'll get it onto YouTube as well. But I rather expect that maybe in the next 3 months we can talk about a different, obviously continuing the theme. And actually, Glen, what would be really good is to get you back on the show and talk about the E2 visa. And Kris, maybe you could talk about, by that time, a bit of pressure on you, sir, to talk about your progress with your E2 program.
Yeah.
Could you be up for that?
Yeah, I mean, there's an unlimited amount of good stuff that we can all talk about. So I think we'll have to do this again soon.
Okay. So Glen, if you can get another deal on the table, so what would be good for the next show, and we'll put it in 3 months' time, is to get a property that is up for the grabs. So whereby you're thinking about JV, or you don't want to do it yourself, and therefore you can get active investors on for that. That'd be great. So we can get.
I actually have 2 right now, so yeah, I can easily have one for them.
Well, actually, why don't you send those details to me, and I can forward it as part of this video when I send it out to clients as well. That'd be really good, and then I can get them all done. But just sort of from a selfish perspective, and I don't mind saying this openly, that we're obviously looking to move to Naples, Florida. So if you've got any good deals in Naples, Florida, do let me know, Kris and Glen, because I really want to get down there.
Good. Yeah. Perfect.
Good choice.
Thank you. All right, guys. Thank you ever so much again, and I look forward to seeing you in our next show.
Thank you so much for the invitation.
Yeah, thanks for having me.
Thank you, guys.
Take care.
Bye.